Once again, thanks for tuning in. Holly Shields here for kalkinemedia. If you're a stock market enthusiast, you very well know why it's imperative for investors to have strategies up their sleeve to eke out maximum gains. Generally, investors and traders resort to strategies which are followed most commonly. However, there are several overlooked stock market investment strategies that can come up with relatively high gains and less risks. With that said, let's shed some light on 5 under-the-radar strategies. But before we get into it, please give our channel a sub and hit that bell icon to stay ahead of the game. First up is covered call options. A call option is a contract option that allows an investor to purchase a security at a strike price until the option expires. On the other hand, a put option allows buyers to sell a security at a particular price until the option reaches expiry. A covered call option is written when an investor is already in possession of a security and is used to boost income and provide some downside protection. Next is relative strength. There are always some stocks in the market that are trending higher even as the overall market is selling off. These shares perform well relative to the market as a whole or to relevant benchmarks. Technical analysts employ an indicator termed as the Relative Strength Index, or RSI, to generate overbought or oversold signals. Following the relative strength is the end-of-day trading strategy. The end-of-day trading strategy is all about trading near the market closing. The strategy involves studying of price action in comparison to previous days' price movements to speculate how the price could move and decide on any indications being employed in the system. However, traders must fix a limit order, a stop-loss order, and a take-profit order to cut down any overnight risk. The fourth strategy to keep in mind is scalping. Scalping is about cashing in on small price changes and making a fast profit off reselling. Scalpers seek to scalp a small profit from each trade with the aim to accumulate those little gains into a significant size. However, this strategy should not be used without a strict exit strategy. And lastly, dollar cost averaging. Under this, you can purchase shares irrespective of price and end up buying shares at a low price when the market is bearish. Then the time proceeds, your cost will average down. So what's the bottom line? Well, investors and traders should always keep in mind that there is no silver bullet strategy or a fixed term pattern for maximizing their profits from stock markets. There are some overlooked but sound investment strategies which could also deliver sound results. And that concludes our list. Now that you're up to speed, check out some of our other info to boost your financial IQ. And if you like this, please give us a like, share, and a comment, as well as a sub. This has been Holly Shields for kalkinemedia.